Hey guys, welcome back. We're now about to dive into December 2023 market reports for all of our trackable markets here around the Indianapolis area. I know you already know this. My name is Chris Knight, Business Development Manager with Red Door Property Management, and I have the pleasure of being joined with Mike Taylor, owner of Red Door Property Management. Mike, how you doing?
Pretty good, Chris. Hey, we did not plan this, but it is fitting that we are wearing Christmas colors. I have a green sweater on, and you have a red sweater on. So totally unplanned, but it works well.
It's orange. It's orange, everyone.
Okay.
It totally looks red. Merry Christmas, happy holidays. I hope everyone had an awesome holiday and is off to an amazing start in the new year. And I'm sure everyone's motivated here at the first of the new year, right? So I know we're going to get tons of viewers. Everyone's tuned in. What do I need to do? Where do I need to invest? Look, the stock market is being predicted to have a rough 2024.
Yep.
I need to put my money in real estate, and we're going to give you the insights into the markets to help you do that. So stay tuned in, like and subscribe. This is where you need to be to find out what's going on in the Indianapolis market. So here we go. Let's do this.
Let's do it. Let's jump into Indianapolis itself. So if you guys remember, been watching this in the past, we kind of have a new format where we're going to go through all of our market reports all in one video here. And so we'll start off with Indianapolis itself. We do have a little bit of a new format. We got a couple little bit of a deep dive graphs. We'll show you after this one to take a little bit of a historical look at active homes and average days on the market to make it a little bit more sense. So constantly tweaking and improving and just trying to make this a better for you guys. So we just jump into kind of the main graph here, median price over time. So we're doing this in January. This is honestly a bit of a year in review, right, for Indianapolis. And so kind of a flat year, to be honest, in terms of growth for average rent. Did see a bit of a bump here, peaked out in September, and then seeing some seasonality, very, very typical, where prices do tend to trend downwards in the winter months. So November and December, almost always, not always, but you'll see a couple of different cities bucking the trend here, but almost always we'll see a decrease in December, and that's what we're seeing here. And then we do get a little bit of a sneak peek here in January, where we're going to start off just a little bit lower than last year. So if you guys have been following this or following the Indianapolis market for a while, you know that Indianapolis, just almost like everyone else, had a huge boom in 2022, right? So, and then had a bit of a correction here in 2023. So that's kind of what we saw, but it's fairly stable. So nothing really too dramatic here. It's a pretty stable market.
Yeah, sorry, Mike. If you're a kid, you're excited to see this. You're about to go sledding on that hill all day long. Although, as an investor, you're not excited to see that, but you're also not surprised. Just like you said, seasonality.
It's seasonality, and it's nothing super dramatic. So I'm not super concerned about it. Active homes, 2164. I'll show you what that means, because we were doing this before. It didn't have a lot of context. So we've added this kind of historical over time. So there is a decent amount of homes on the market. That's 2164. Again, going back to the average rental price for December, closing out the year here, 1325 is where we are in the Indianapolis market. So that's very, very affordable from a renter's point of view, and super attractive. So that does represent a little bit of a decrease from last year. Again, we're seeing a little bit of a correction from those heights that we saw in 2022. And as I mentioned, going into the end of the year, a decrease from last month. I'm going to attribute that to seasonality. Average days on the market, if you've been following this, it has been a wild ride for Indianapolis days on the market this year. It has been all over the board. So 66 is a little higher than we would like to see. I don't know if there is a typical anymore, but typically we would see that probably between 30 and 45 for the winter months. So we are a little bit higher than I would like to see. But I'll kind of maybe dive into that a little bit more as we look at the historical the days on the market over the course of the year. Jumping over here to average sales price. Again, we look at this from an investor point of view. So we look at homes under $500,000 in the Indianapolis market. And I know I always harp on this every single month, but gosh, that's just so affordable. $225
Yeah.
046 is the average sales price. That is so affordable, and probably one of the reasons, probably a major contributing factor to Indianapolis was just named, what was it, Chris, number 4 hottest market for 2024? Is that what it is?
Absolutely. If we're going to say anything during the Indianapolis market report, it's to point out. Let me just pull up real quickly so I don't mismention anything here. Indianapolis expected to have the number 4 hottest real estate market in the country this year, according to online real estate listing site Zillow. That's awesome. I don't want to spoil too much here. I am going to shoot a separate video just doing a slightly deeper dive into that, but kind of just glossing over why Zillow might be in tune with the Indianapolis market. But what investor doesn't want to hear that right now? I mean, Zillow knows what's going on, right? I trust the information. Number 4 hottest market, Zillow, I agree.
We won't ruin it, but it's affordable. Indy's got great fundamentals. It's a great place to live. Rent is still affordable. When you start looking at other parts of the country, gosh, $225 and $1,325, those are such approachable numbers. It's no wonder that we're not number 1, to be honest with you. But I'll let you get into that with your video, Chris, on the next one.
No spoiler alerts here.
Yeah. All right, number of homes sold at that price point, almost 800 homes. So it's not like, we're cherry picking these. There's just a couple of these available. There's tons of homes available in this very, very affordable price point. So it's there's lots to choose from. Yeah,
this is awesome. Honestly, and I don't feel like I've had the same feeling about the Indianapolis market that I do now, right? I mean, Indianapolis is, everyone knows, or if you've been an active investor for any time, you probably know that Indianapolis is a pretty good market to be a part of. We're not only on Zillow's number 4 hottest list, we've been on other lists before, but it surprises me. It makes me feel like this is more of a stable market. This is stabilizing, and I mention that only because previous months I haven't felt like there's been any stabilization. It's kind of been all over the place, like you mentioned about the average days on market, which we're seeing trending up, which doesn't surprise me. Seasonality, you're going to see that trend up a little bit. Average sales price down just slightly. It's only down, if I'm looking at last month, it's only down $2,000 over the November 2023 market report. Doesn't surprise me. Interest rates are going up. That alone, seasonality alone, I think speaks to that much. But let alone the interest rates kind of creating a little bit of fear in the market and slowing down, which we're also beginning to see change here a little bit with market interest rates trending down here.
Yeah, and I think historically, we have seen a little bit of a volatile marketplace this year with days on the market, with average rents, but historically, Indianapolis Metro has been just a very stable market, a very safe market. We're not California, we're not Phoenix, we're not Austin, so you're not going to see these huge increases in rent, huge increases in sales price, but you're also not going to see these huge decreases. Those guys go super high and then they go super low. Indianapolis is just steady, true, fairly predictable. So if you're looking for a safe investment, I think Indianapolis is a great place to look.
Absolutely. Couldn't agree more.
Cool. Let's take a look at these new graphs that we've added to add a little bit more historical kind of a framework for a couple of these things that we look at. So we look at active homes on the market. Well, what does that really mean? 2165. Compared to what? Right? So you can see the trend is just slightly more inventory over the course of the year. So the low point was 1677. We were actually at the high point this year of 2165. So it is trending up, not at an alarming rate, but this just gives you a little bit of a historical viewpoint of where we are with our inventory. So it's creeping up, but actually I think the renter pool is also creeping up with interest rates. I can't tell you how many articles I've read about how it's the worst time to buy a house versus rent a house. And so I think the available number of renters is also increasing with this supply as well. So yes, we're seeing an increase in supply, but also increase in number of renters.
Yes, again, you talk about reading articles. I can't tell you how many articles I've read about new commercial industry coming to the Indianapolis area, just population growth in the Indianapolis area, which might be another thing that we might want to track as we start doing more and more of these market reports, right? That's going to directly correlate to, or how does that correlate to your active homes, your median rents over time, things of that nature. But yes, commercial industries coming in the Indianapolis area and surrounding markets. I don't think there's any concern with the increase we're seeing here on active homes on the market, without a doubt. And just looking back, because I would hope that active homes on the market in some way correlates with your average rents. I mean, we are seeing rents decrease month over month, but only very slightly. So it's very stable, can speak to seasonality. I don't think there's any indication here that active homes on the market is any direct reflection on the rents in the area. So it tells me that supply is keeping right up with demand.
Yep, totally agree. All right, let's jump to days on the market. If you've been following this at all, you know that days on the market has been just a total wild, unpredictable ride for Indianapolis this year. We ended the year at 66, which is actually not bad, all things considered. For some reason, we had this crazy peak in June of 124. That was super alarming. And thankfully it got there, and then it kind of slowly worked its way back down. So again, in my mind, an average for the winter is, between 30 and 45. Average for the spring and the summers, probably somewhere between 2 to 3 weeks would be more of an average there. So I think we had a little bit of, just speculating here, but I think in 2023 we had a little bit of exuberance from our investor community. They saw the returns and the increases that they got in 2022, and I think some investors got a little excited and thought they could do that again in 2023 with their asking prices. And I think that's some of the reason that we're seeing or saw this increase days on the market in 2023. So I think there's a little bit of a reset happening. But again, that's just a little bit of speculation. Any thoughts for you, Chris, on days on the market?
No, exactly. That's exactly where I would land. And if you tune into these market reports, some of this is going to be some of the same things that you've heard, right? As the markets do fluctuate a little bit. And that's exactly what we've indicated previously. Now, directly relating those comments to the days on the market, I would expect May and June to probably have, because that's how I felt when in the actual market with the boots on the ground. I felt like there were a lot of investors over April, May, June, July wanting to achieve the rates that they were hearing about. Throw any rental amount you can on the board and you're going to place a tenant. Well, and then you had to bring the investor or homeowners expectations back down to reality, right? So you're bringing those back down to reality, and that's exactly what you're seeing in that transition from June, July into August. So that's, I'm right along with you, Mike. That's what I think is happening here. If I'm going to encompass all that into one term, it's going to be a correction in the market.
Yeah, I can tell you, and I know, Chris, you probably had more of these conversations than I did, but we, in those May, June, and July timeframes, we were having some difficult conversations and educating our homeowners of, hey, here's what's happening in the market. You need to really think about your price and adjust your price accordingly.
Right.
We were having a lot of those difficult conversations, and again, educating our investor base as to what's happening in the market. So again, this kind of boots on the ground view there.
Exactly, boots on the ground assessment. That's what that is, and there's still some of that still happening right now. And then seasonality involved in that as well. But yeah, that's certainly my speculation as well.
All the more reason to watch our market reports and stay up to date on the market. You can get ahead of it, right?
You're darn right. If you're investing and you're not in tune with these reports, then you're not doing yourself the justice that you should be doing. I mean, this is the research that you need, and we continue to expand these reports for that reason. We'll continue to provide more data. This is going to start turning into, instead of a 30-minute podcast market report, you're going to start seeing these, without a doubt, grow into an hour-long informative session on each one of these markets. And I mean, you've got to be in tune with that stuff. So.
No, but honestly, we're kind of joking a little bit, but it really does pay to stay in tune with the market, know what's going on, be knowledgeable about the market. I mean, if you're investing with us, we're going to communicate this to you so that you know that. But getting ahead of this, knowing that, oh my gosh, in June the averages in the market is 124 days. Gosh, I need to react, and I need to react quick, so that you're not down here, waiting till October or November to rent your place. You can get it, make the price adjustment accordingly quickly and get the vacancy filled.
Excellent point there. It was hard to hold back there for a second. You make an excellent point. If you're not tuned into this, your property manager better be, right? If you're hiring a property manager that's not in tune, you're going to, without a doubt, see higher vacancy rates than you're going to see market wide, without a doubt. They need to be in tune with this information. So if you don't think your property manager is already, feel free to send them a link to the podcast. They have them like and subscribe. We're happy to share that information with them. It's no problem to us. We will share with anyone who's interested in listening because we think it's important to drive the investor market here in the Indianapolis area.
Absolutely. Absolutely.